Okay, so welcome along. Okay, so we'd like to make a start tonight. Then we're going to have a look through two different types of questions. The first one we're going to have a look at is very much a calculations question, and that's the activity-based costing. Okay, so if we're following, it's on page 36 of the revision notes that everyone got emailed out. Okay, so remember, there's three types of costing. Okay, we're looking at marginal costing, which is based mainly around the variable costs. We have absorption costing, which has the variable and the fixed costs. And we also have this delight, which is activity-based costing. Now, the whole idea about activity-based costing is that it's meant to give us a much more accurate method of costing. So I hope you can understand that when we look at absorption costing, every single unit for every department costs exactly the same. And for the marginal costing, it's the same sort of principle, except we base it around variable costs only to arrive at a contribution, and then we take off the fixed costs in total. Activity-based costing is meant to be much, much more accurate because it takes what we call cost pools and cost drivers, and it lets us have a much, much more accurate method of distributing the costs between the relevant departments. So let's have a look at this quick question. So hopefully everyone's okay and can see that all on the screen. We have the question on the left-hand side and my workings on the right-hand side. I always send over my workings so that hopefully they get sent out with the recording. Okay, so can I just confirm that before we go on that everyone can see that okay and everyone can hear me? If you can you just pop a Y in there? Louisa, this is on the revision questions that get sent out. Apologies if you don't have that one. It is on the screen, and I will ensure that everybody gets that sent out with the link. Caroline's popped the link in the chat box there as well for you, Louisa. So try and click on that one there. That would be great. Caroline, thanks very much for your help. Absolute star. Thank you. Okay, so we have a company. We have Canon manufactures two products, flash and dull. Okay, so we're given much more specific information regarding an activity-based costing question. So we're given the cost per unit for the direct materials. Okay, it's fairly standard. We're given the direct labour cost per unit, again, fairly standard. And we're given the direct labour hours per unit, again, fairly standard. Okay, however, what we're looking at now then is we're looking at the different pools. Okay, the different pools and the different drivers. So we're given the number of deliveries in each department. Okay, so we're given the number of deliveries for flash and the number of deliveries for dull. We're also given the number of setups. Now, this is a very common thing in activity-based costing. Setups, it's relating to the amount of times that the machines have to be set up for each individual process. So flash, the machines have to be set up 170 times for the process, and dull have to be set up 190 times. That's an awful lot of setting up. We're then given the budgeted production units, 1,600 units expected for flash and 2,800 expected for dull. Okay, then we're given the question. Complete the table below using activity-based costing principles. So the first thing they ask us to do is to set up the cost driver per delivery. So we want to know how much this company is paying per delivery. Okay, that's going to be our driver for splitting the costs. It then wants us to work out what the cost driver is per setup. But once again, we are looking to split the overheads much more accurately, so we need to find out what the driver is, the driver for the setup, okay, how much it's going to cost per setup. Then we're given the total overheads for deliveries, 153,000, and the total overhead costs for setups as well, 117,000. Now, the thing about activity-based costing is There's no two ways around it. It's very long-winded, I'm afraid. It is very accurate, but it's very, very long-winded. So let's have a go and we'll work through everything a bit at a time. Now I've just replicated the question on the right-hand side so I can write in it and basically make a mess on it as well. So the first thing we want to do is we want to have a look at the cost driver per delivery. So the first thing we need to do then is, I would suggest, working out the total deliveries for the entire company. Okay, so we can see then that the total deliveries, we have 160 deliveries in Flash and 180 deliveries in DOL, which gives us in total 340 deliveries. Okay, what we can do then, now we know the total number of deliveries for the entire business, we can work out our cost driver per delivery. What we'll do is we'll take the total overhead costs for our deliveries. We can see that there, the total overhead cost for deliveries is 153,000. Okay. If we then divide it by the total number of deliveries we've just worked out, 153,000 divided by 340 deliveries gives us a cost of £450 per delivery. Great. So we now know our cost driver per delivery. Straight in there, £450. So for every delivery in the business, it costs 450 quid. Okay, so that's our first step. We've got our cost driver per delivery. We now need to do exactly the same for our setups. So we'll follow exactly the same principle. We'll work out the total number of setups. Okay, so we've got that there. The question tells us that it's 170 for Flash and 190 for DOL. 360 setups. Okay, so sounds a bit long-winded, but the machines have to be set up 360 times. Sounds like too much like hard work to me, but that's how the questions say. Okay, we'll follow the same principle as what we've done, except this time we'll take our total overheads for our setups, which we can see there is £117,000. And this time we'll divide it by the total number of setups that we've just worked out. 360 setups. So 117,000 divided by 360 comes to the nice round £325 per setup. Whoops. Setup. 325 quid. Okay, so that's worked out our cost drivers. Now, the key on this one is to remember you must add up all the deliveries, in this case, for the whole company, and the setups for the whole company. Must add them together in order to get a total number of deliveries and setups. We can then use those to work out, so we get a cost driver per delivery and per setup. Okay, so that's answered our first two parts of the question there. Okay, now what we need to do now then is we need to use these figures to more accurately divide the total overheads between Flash and DOL. So we need to divide the total overhead for deliveries using the cost drivers and the total overhead costs for setups using the cost drivers. Okay, so let's start. We'll do the total overheads for deliveries first. Okay, now we now need to refer back to our question. Okay, so let's do Flash first of all. Okay, we look back to the question and we can see that Flash has 160 deliveries. Okay, so we'll make a note of that. Oh, thank you very much. There's some great answers coming in there already, so thank you for that. So Flash has 160 deliveries. We worked out It is very similar to apportionment, Caroline, yeah, but it's all about working the cost drivers out first of all. Okay, so, and we know that every delivery is 450 quid. So 160 deliveries multiplied by £450 per delivery. So 160 times 450 gives us £72,000 for Flash. So we'll pop that in there straight away. As Delia's already seen on the screen there, she's worked that one out for us. So that's great. Thank you very much. So then we do the same thing for Dull, except this time on Dull, we have 180 deliveries. So it's going to be 180 deliveries multiplied by 450. And that should get us to £81,000. And we'll pop that into there. Okay, now our final check, add those two together, 72 and 81. I use my calculator because it is a little bit later on in the evening tonight. Yep, exactly, Natalie, check the totals, and that does come back to 153,000. Okay, but by using that cost delivery method, that cost driver method, it's, as Caroline said there, it's very, very similar to level 3 allocation and apportionment. We are splitting them on a more, fair basis. Okay, then we need to do exactly the same for our total overhead costs per setup. Delia's in again there, brilliant stuff, very fast typing. Okay, so we look for the number of setups for Flash, 170, and we know that it's £325 per setup. So 170 times 325, 55,250, brilliant stuff. And then we do the same for Dull, 190 setups this time, again, at £325 per setup. So 190 times 325 is 61,750. So let's pop them in, 55,250 and 61,750. Brilliant. Thank you, Deborah. Brilliant stuff. Okay, so, and then as Natalia said before, check the totals. Check the totals. 55,250, 61,750 does indeed add up to £117,000. Okay, and that's part A done. Okay, so I hope you can see it's very much a two-step process. Working out the cost driver, using the total overheads and the numbers of deliveries to work out the cost per delivery and the cost per setup. And then we apply those costs to the individual number of deliveries for each department or company and the number of setups for each department or each company. Okay, each product. So how do we feel about that? Any questions on that? Are we happy? Is this part of activity-based costing a lot easier than it appears in the notes? Yeah, no questions? All good. Yep. Thanks, Caroline. Yep. Okay, all goof. That's good news. Brilliant stuff. Thanks, Lisa. Brilliant. Okay, so that's activity-based costing. So hopefully you'll see that it's not as fearsome or as nasty as it first appears in the book, because, it can be a little bit daunting, this one. Okay, let's move on then, and let's have a look at task 2B. So it looks very simple at the bottom there. Use the information from above to calculate the fixed overheads, assuming they are based this time on a budgeted labour hour basis. Okay, so we're going to be going back to normal and we're going to be using a labour hour basis. So I popped the question up there again for us. I may need to scroll backwards and forwards again as well, but let's have a look. So we are looking to calculate the fixed overheads, this time based on budgeted labour hours. Okay, so we basically need to restate these figures, the 153 and the 117. We need to restate them based upon budgeted labour hours. So our first step then, I would suggest we need to work out our total overheads. So we need to add both of them together. So our total fixed overheads will be 153 plus 117, thanks Sarah, £270,000. Okay, so we've worked them out. We know that that's the split that's in there at the moment, but we need to change that split. Okay, what we need to do then is now we need to work out, okay, what our labour hours are. Okay, now we're given the labour hours per unit. We need to work out our total labour hours for the entire business. Okay, so let's have a look then. So first of all, we'll deal with Flash. So we can see the Flash has 3 direct labour hours per unit, and we're making 1,600. Okay, thanks Sarah. Yep, I think you're right there. Thanks very much. Okay, Sarah, yep, great. So 3 hours times 1,600 units gives us 4,800 for Flash. Yep, everyone's coming in with those. Brilliant there. And then for Dull, well, it's 1.5 hours per unit. And this time we're making 2,800. So 1.5 times 2,800 gives us 4,200 hours. So if we add both of those together, 4,800 plus 4,200, brilliant. Everyone's coming in with the answer there. So thank you very much. That gives us total of 9,000 hours. 9,000 labour hours. Brilliant. Now everybody seems to be following that okay. So that's great. Now the next thing we need to do then is we need to work out a cost per direct labour hour. We've got all the figures we need for that now. Brilliant. Thanks, Jackie. That's great. We have our total overheads, 270 grand. And we have our total hours, 9,000. So if we divide our total overheads of 270 grand by our total hours, 9,000, as Jackie said there, we end up with £30 per direct labour hour. Great. Okay, so brilliant stuff. We've got our, effectively, that's our overhead absorption rate, isn't it? We've got our £30 per direct labour hour. We can then use that to work out our reallocated fixed overheads. Okay, brilliant. Let's do Flash first. Okay, so we know that the direct labour hours are £30 per hour. What we now need to do is we need to have a look back and see how many hours. Yep, Elizabeth, brilliant stuff. Yep, Denise is straight in there as well. So £30 per hour. Okay, but then we just look back and see what we worked out. 4,800 hours. So if we times our £30 by 4,800 hours, that will bring us to £144,000 for Flash. We then do exactly the same again for Dull. We know that it's £30 per direct labour hour. And we know we worked out that Dull is 4,200 hours. So 30 quid times 4,200 gives us 126,000. So everybody's in there. Yeah, brilliant. Thanks there to everybody, and thanks Deborah for doing that little table. That's great. So £126,000, all good stuff. Then, as Natalie said earlier on, do your check. 144 plus 126 does come back to the 270. Okay, so that's reverting the overheads to a very much more traditional method that we're used to, working out per direct labour hour. Okay, so we've taken the figures that we were given and we've restated them using direct labour hours. So Couple of steps again. First of all, work out the total fixed overheads, then work out the total budgeted hours. So we can do that by our direct labour multiplied by the number of units, and that'll get us the number of hours that we need. We can then divide the total fixed overheads by the total hours to give us our cost per direct labour hour. We'll then apply that to the number of hours that we worked out there for each particular product, and that'll give us the share of the fixed overheads for each of the products. Okay, nice and straightforward, this activity-based costs and like, isn't it? And a little bit of revision there from management accounting budgeting and from level 3 MMAC. Thanks, Natalia, that's much appreciated. How do we feel? Any questions on that one then? No, we're okay with that? I love it when there's silence. That's brilliant. Great stuff. Thank you very much. All good stuff. Great. So hopefully, fingers crossed, you'll get a question like this one. I think I'm one of the few people who doesn't actually mind an activity-based costing question. When they were first introduced a few years ago, I wasn't the greatest fan, but the more you do, the easier they become. And that's what I'll say to you, you know, please practice, practice, practice. Okay, now then, that question there, you're going to be looking at, I think that's going to be 10 marks there, Dave, for that one. I think you're going to be looking at 6 marks for the first bit, and you're going to be looking at 2 marks per question for that one. Okay, so a nice 10-mark question. Yeah, Humera, exactly. If you follow those steps, you should be fine. Okay, so I'll make sure that these notes do come out with the recording. So please feel free to use them to your heart's content. Okay, brilliant. Now then, the next thing I'd like to have a quick look at then is if we can turn over to page 41, it's our target costing question. Okay, now, and someone said earlier on that we've done this a couple of weeks ago, but not everybody will have been on the call then. So I've been asked to have a look through them again. Sarah, no, I don't think you can, unfortunately, sneak them into the exam. Nice try, though. Okay, now then, target costing is another very, very common question. Okay, now what I'm going to do tonight is I'm going to have a look through a couple of questions where we have to do the calculations, and then we're going to have a quick run through one of the theory questions based around target costing as well. Just those are the 2 different types of question you can get, so it made sense to do both. Now, if we look at the question on page 41, the good thing about target costing is that the majority of the information is already given to you. Okay, already given to you. You just need to read the question very, very carefully. And it's also, believe it or not, an awful lot of throwback to level 3 management accounting costing. And you could even say it's a throwback to level 2 elements of costing as well. Okay, this is very much a calculator and number crunching question, which is what we all like. Yeah, give us calculator and number crunching questions all day over the written questions. Definitely, especially at this unit, the written questions. Okay, so let's have a look. So we are Stretch and Go. Where to get these names from, I've no idea. And they're designing a new product. We won't ask what it is. Yep, yeah, exactly, Sarah. Number crunching ones. Yep, okay. So we've been given the following information. So the price of product will be sold at is 18 quid. So Natalie's straight in there somewhere and said sales price is 18 quid. The fixed costs are £3. The labour requirement is 10 minutes per unit at £12 per hour. The profit margin is 30% and the materials requirement is 0.75. Now this is fairly straightforward if we just follow the steps. Okay, now the first step is always the same. Put in the figures that you know, put in the figures that you are given. Get some marks on the board straight away. Okay, now Natalie came straight in there and said that we have the sales price of 18 quid. Okay, Brilliant, Natalie. We'll come down in a moment. So spot on. Thank you. So I'll fill this one in. The sales price per the question is 18 quid. Now, personally, on a target costing question, when it's like this, put in pounds and pence. Okay, normally in the question, you will be told whether to use pounds and pence or not. Okay, yep, everybody's coming in there with the profit margin, yeah, but what I'd like to do first of all is put in the figures that we know. Okay, we are told that the fixed costs are £3 per unit. Okay, so yep, everyone's okay there. Everyone's coming in with very good suggestions, and you're all right. Okay, put in the fixed costs per question, and we know that that's 3 quid. Okay, get that figure, get those figures in, because you are given those figures. Okay, you are given those figures. Okay, the next thing we know we are given is the best thing, the required profit margin. Okay, now here's a bit that you need to remember. Okay, as everyone's been saying there, the profit margin is included in the selling price. Okay, the profit margin is included in the selling price. Okay, so when you're working out a margin, if you think of the selling price as 100%, okay, think of the selling price as 100% when you're thinking about a margin. In this case, then, the profit margin, the gross profit, will be 30%. So if the sales price is 100% and the profit margin is 30%, what percentage does that make the total cost or the cost of sales? Quite simply, if the sales price is 100%, the profit is 30%, the cost of sales must be 70%. Yep, brilliant. Brilliant. Okay, so we know the profit margin is included in there. Okay, is included in the sales price. So we'll say £18 times 30% is our profit margin. And everybody's been coming in with them figures there. Brilliant stuff. That means our profit margin is £15.40. And as Sarah's just popped in there, £5.40, I beg your pardon. Yep. So as Sarah's just popped in there, and a lot of other people have popped in as well, the total costs will be the difference between the selling price and the gross margin. I'll keep it the same names that's in the question. The profit margin, and that's going to be £12.60. Brilliant. Okay, so by our knowledge of margins, okay, margins are included in the selling price. So therefore, 30% of the selling price will be the profit. Okay, Humera, it will usually tell you in the question whether to put costs in as a negative or not. If it doesn't say it, don't do it. Okay, if it doesn't say it, don't do it. That's the easiest thing to remember. It's a horrible thing to say, but these AAT exams, it's very much do as you're told. You know what I mean? Okay, yep. So Sarah, Natalie's coming in with some questions, with some answers there for the next bit, which is our labour cost. Well, we know that the labour costs, the labour requirements, I say if when it's in lower figures like this, show you pounds and pence, but in the questions they will normally tell you in the AAT. So we know first of all that the labour requirement is 10 minutes per unit. Okay, brilliant. Now this is where some people might get a little bit confused. Some people will look at that and think, right, we can make 10 units in an hour. Okay, please be careful. Okay, because under the pressures of exams, it's very easy to look at that and see what you want to see. Okay, so labour requirement is 10 minutes per unit. That doesn't mean we can make 10 units per hour. If it takes us 10 minutes to make a unit, how many units can we make in an hour? 6. Brilliant. We can make 6 in an hour. So if the hourly rate is 12 quid, and we can make 6 units per hour, as people have been putting in there then, the labour cost is £2. Yep, the labour cost is £2. Brilliant. Okay, so 6 units per hour, so that's 10 minutes, isn't it, per unit? Now then, the maximum material cost per unit, this is where we need, now be careful there, Natalie, be very careful, okay, because what I think you might have done is you might have added it up and we need to take them off, okay. Okay, so you work it out 12, yep, that's exactly the same, Louisa, that will work exactly the same way. Okay, so in order to work out your maximum material costs, no problem, Natalie, you're okay. So what you would do is you would take your total cost, take away your fixed cost, and then take away your labour cost. So that's 1260, take away 3, take away 2, and that gives us a maximum material cost of £7.60. So really, once we have our total costs, we take off our fixed costs, we take off our labour costs, and that gives us the maximum amount that we have left to spend on our material. Okay, so yeah, we're back to maths, aren't we? So we've just worked this out all the way down, and everyone was jumping straight in there, so that's great. Okay, now then, this is the tricky bit. Okay, now we're told that the materials requirement is 75 kilograms per unit. Okay, 75 kilograms per unit. Now, we need to be careful, 0.75 kilograms. Okay, so that means that 0.75 kilograms, the most it can cost us is £7.60. Okay, so 3/4 of a kilogram must cost no more than £7.60. So what we need to do then, we need to work that out. Yep, so exactly right there, Karen. Exactly right there, Jackie. So what we can do then is we take the £7.60 and we divide it by 0.75 kilograms per unit. Okay, so that will give us the target cost of materials of, yeah, 10.1333 recurring, or because we can't get 0.33 recurring for pence, £10.13. Okay, now this one, to me, this question, when you look at it and you come up with an answer of £10.13, yeah, as long as the quality is okay there, Deborah, we're not going to rock the boat with wastage and things like that. So we'll keep it nice and steady for this one. Yeah, you have to be careful there, Humera. Yeah, you need to divide it by 75.75 because that's what 3/4 of a kilogram must cost you. So you need to gross it up. Okay, brilliant stuff. Now, as I was saying, when you look at this answer and you see 10.13, when I did my exams years ago, I would look at 10.133333 recurring, and I would think I've done something wrong, you know, because the majority of times the AAT questions do come to round figures. Okay, that's not necessarily true in decision and control. Okay, it's not necessarily true. Yeah, I always think that as well, Sarah. I always look at that and I think if it's not a round pound, or if it's not like 25, 50 or 75 pence, there's a problem. It doesn't work like that in decision and control. Exactly, Caroline. Well, the rest have been so nice and round figures. So please watch for that. Okay, so I just want to be aware of. So hopefully everybody followed that one all okay. Step by step by step. Yep, you're right, Caroline. Step by step by step, build it up. Put in the figures that you know straight away, the ones that you're given per the question. Then, based on your knowledge of margin, we can work out our profit and our overall target cost. Watch for where it says 10 minutes per unit and make sure we get that right. It doesn't mean 10 units per hour or 10 units per minute. It's 10 minutes per unit. So we need to get that right. Okay, that leaves us with the total amount we have left to spend on material, and then watch what we're doing. Will we see markup as well, Natalie? To be honest with you, no. You normally be given the sales price. Okay, you normally be given the sales price, so you can only base it on margin from that. Okay, so sorry, I mistyped that. Sorry, that should be the target cost per kilogram, not the target cost per unit, because if £7.60 is going to be for 3/4 of a kilogram, we'll need to gross that up. Sorry about that. Yeah, sorry, I mistyped it there on that one. Okay, sack the chowder. Sorry, I'll not be back. Sorry about that. Yeah, so does that make sense now then? Yeah, brilliant stuff. Thank you for that. Great, per kilogram. Well, that's all right, Sarah. Thank you for that. It's okay. Right then. Okay, let's have a move on to the next bit then, which again looks fairly innocuous. So the trade price per kilogram has been quoted on the suppliers list as £15 per kilogram. Okay, so what I've done is I've just put together a little table like this. I like working in tables like this because it makes it look easier. Okay, so let's put in the supplier's price per kilogram, 15 quid. A trade discount has been negotiated on the list price. Okay, so of 10%. So if we take off our trade discount of 10%, £1.50, that's going to equal our price after our discount. Yeah, which Natalie's popped in there, £13.50. Okay, brilliant. Now then, the discount should be accepted or rejected. Okay, yeah, we should reject it. Yeah, so we should reject it. Why? Because we only have a maximum of £10.13. Laughed at. Yep, that's right. Yep, we have a maximum of £10.13 to spend on our materials. So £13.50 is a non-starter as far as we're concerned. We can't consider that. Okay, so thanks for everybody who's popped through that there saying that we should reject it. Okay, so it's because it's above our target cost. This last bit, the minimum discount percentage we need to achieve the target cost is what? Okay, yeah, exactly right there, Elizabeth. Okay, be careful now, Denise. Okay, if this was written, what would you say to go to another supplier? I can't afford to pay that. Can you knock it down to £9.50 per kilogram and we're in business? That's what I would say to them. £9.50, because we really don't want to spend £10.13. If we can spend less than £10.13, we'll be happy. So try to negotiate them down as quickly as you possibly can. So to work out the minimum discount, what we need to do, I pop this into a formula for us. So we take the £10.13 that we have available. We take the £10.13 that we have available, and we would divide it by the price before the discount. Be careful, because they're asking us what the minimum discount percentage is. So we must use the price before the 10% discount. So we would divide that by 15. So £10.13 divided by 15, okay, is 0.675. If we then took that away from 1, times it by 100, that will get us to 32.5% discount. That's what we need. So we can test that. Okay, Sarah, no problem. Okay, our target cost is £10.13. Okay, let's break this down then. Our target cost for materials is £10.13. Okay, we'll come down in a moment, Sarah. Okay, the price before our discount is 15 quid. Okay, now then, to work out a percentage, Yep, pause in there straight away. Yep, good stuff. Okay. Okay, now be careful there, Tony, because the target cost per kilogram is £10.13. Okay, we're looking at a kilogram of materials here. So we need to use that figure that we grossed up at the bottom. So to work this out, really, if we do the £10.13, oops, and we divide it by the £15, 0.13 divided by 15, that says that that gives us the 0.675333. If we then times that by 100, that tells us that our target cost of £10.13 is actually 67.5% of the supplier's quoted price. Yeah, so pause where works exactly the same. Yeah, okay. So therefore, if we do 1 or 100%, take away 0.675, which is what 67.5% is, we come to 0.325 or 32.5%. Yeah, okay, brilliant stuff. We weren't expecting advanced mathematics at this time of night, so I apologise for that one. I apologise. Yeah, brilliant. But pause is a good way as well. Definitely a good way. So yeah, so you get the 15 minus that is 487, then divide that by 15, which was the original price, and you still get 32.5%. So either way works, whichever way is easiest to work. But watch it, Tony, because that 760 was our target cost. We grossed that up because that target cost only represented 3/4 of a kilogram. So we had to gross that up to get to 1 kilogram. Okay, brilliant stuff. How do we feel about that? We're going to have one last bit and we're going to have a look through the theory element for target costs. And so before we move on, are we all okay? Brilliant. Well, you're making me work hard for this one, that's for sure. So that's good. Great stuff. Great stuff. Okay, so the next bit then, we have Mumford PLC uses markup to determine its sales price, but now they're thinking about moving to target costing. Do a briefing paper explaining what target costing is, okay, how it should be used, and 2 advantages. Okay, and we're looking for 8 marks. So really, we're looking for 8 points in total. Okay, so the first thing, prepare a briefing paper explaining what target costing is. Okay, so we will put in exactly what target costing is. Well, what we use it for is we use target costing to work out the maximum costs we have available based on selling price and required profit margin. So we'll put this in technically. Okay, now be careful, Natalie, with life cycle costs. Okay, because it's not relevant for this one. Okay, so target costing is where we take the selling price and we take off what profit margin we need, and that leaves us with the costs that we require. Okay, so we know what we want to sell it for, and we know what profit we want to make. Okay, potentially, Sarah, yes. Potentially, this could be a theory question. It could give you both of these. Oh, sorry about that. Okay, yeah, so really, it's how you word it. We know this, we know what we want to sell it for. We know what the profit is. So therefore, if we know what we want to sell it for, and we know what the profit is, as we've just done, we know what the costs are, or we know what we want the costs need to be. Okay, so we'll have done some kind of market research to find out what selling price is acceptable to our customers. Okay, so we'll have searched, we'll have asked, we'll have looked, checked our competitors, we'll have done all kinds of research to find out how much we can sell that for. We'll then decide how much profit we want to make. And we will deduct the profit from the selling price. Okay, so we've done some research to find out how much it's going to sell for. We decide how much profit we want to make on each unit, and we'll deduct that profit. And that will leave us with our costs. So this is how much we need for our production. So this will cover fixed costs and variable costs. Okay, so remember, your variable costs are things like your materials and your labor, and your fixed costs are the costs you will pay regardless. Okay, so that's what you're left with here. You've done your research for your price, you take off for your profit, you are left with the maximum amount that you can use to make the product. Okay, now then, you might come across a problem. You might find that the costs you are left with, we can't make the product for the costs that we're left with. So if it doesn't cover the cost of production, this is known as a cost gap. Okay, this is known as a cost gap. So if you produce more than we expect, do we adjust the profit margin, or do we just reduce the profit margin if it's not adjusted? These tend to be a target cost per unit, Sarah. So it's not based around the number of units that you produce. It's just based around the costs for a single unit. No problem. Okay, so if we can't make the product for the costs that we've allocated, we have a cost gap. And we need to look at ways to reduce the costs to the target costing figure. Okay, it's not part of this question, but just to throw a question out there. Okay, let's just say that we know that we can spend £5 on materials. Okay, and you know the material we want is not available for £5. What's an option for us there? Cheaper material, more shoddy. I like that. Yeah, we could use a cheaper material. Okay, reduce the size of the product. Thank you, Linda. You're probably thinking along the lines of chocolate bars and Quality Street and things like that. Yeah, we could look for new suppliers. We could look for a bulk discount. Yeah, yeah. Deborah says there we can change the design. We could change the design. Okay, yeah, but that's definitely an option. But you know that would mean going right way back to the drawing board. Different supplier there from Jackie. Reduce. We could reduce our margin, Sarah. Reduce it. Take our margin down, which will give us less profit. You know, no, don't worry about that, Sarah. Yeah, you're certainly right there, Humera. Yeah, but it will give us less profit, but will give us more costs. Okay, so that's a potential. But everything has its risks. You know, you want to make a certain amount of profit. You can try and negotiate a bulk discount. You might get that. If you use a cheaper material, what might you end up with if you're using your production? Cheaper material tends to lead to more what? Wastage. Wastage. Brilliant. Yeah. Yeah. Now, you could up the selling price, Caroline, but you are stuck with this selling price at the moment. Okay, because that's the maximum. You've done your market research to say that that's the maximum amount that people will find acceptable. Okay, brilliant. So what you've just done there when you've been working through there is you've kind of answered other questions. You know, when it says that, you know, if you're using more shoddy material, increase wastage, it may also increase labour time. Yep, brilliant. Okay, now then, what happens if we can't? If we can't reduce the target cost figure, it's possible that we might not be able to make the product. Okay, so if we can't bring the price of materials down, if we can't bring the price of labour down, It's difficult to bring the price of labour down because of the national minimum wage and the living wage and things like that. So, as you said there, it could be back to the drawing board. Okay, so that's basically target costing. We have our selling price, we take away our margin, we are left with our costs. Okay, and those costs must cover variable and fixed costs. We must then work hard to make sure that we can make our product for the available costs. Now, it's asked us for a couple of advantages, 2 advantages. Okay, now I've thought of 3. Because we've done our market research, the selling price is always competitive. We've looked at what our competitors are charging. We've asked people what they are willing to pay. Okay, yep. Being able to see any potential cost gaps. Yep, that's great stuff as well. That's another one. Because we base it on a selling as a margin, the product is always profitable. We start with the selling price. We then take off our profit. Okay, so we know that we are always going to make a profit. Okay, selling price, take away profit equals target costs. You would never say a selling price plus loss, because you would be out of business very, very quickly. Yeah, so we are guaranteed to make a profit per unit because we start with the selling price and we take off the margin. Our profit is our margin. Disadvantage, it's very hard to describe exactly. Okay, and the best one is it always encourages us to look to see if we can save costs at all times. We always look to save costs, and by using target costing, our hand is forced. We are looking at making savings all the time, okay, because we must drive the costs down so that we can meet our targets. Thanks for that, Caroline. Okay, so no problem at all. So that's a good example there of a theory question for target costing. 8 marks available there. Really, you're just explaining the process that you went through to calculate those costs. Okay. Now, any questions on that one, please? No, we're all okay with that. Suddenly understand it after the written part. That's great, Joel. That's great. Which task is this likely to be? It could be task 7, or potentially you're looking at a calculation question and then a bit of a theory question. Yes, Louisa, no problem at all. I'm going to ask when they send it out, I'm going to send over these notes so that it comes out with the link to the recording. Yep, no problem at all. You break it down to whatever you think is easiest, okay? Bear in mind that the marker is just looking for something that they can understand, okay? So put it in as simple English as you can get it. Make sure that you put it in individual sentences and individual paragraphs like that, so that it makes it clear and nice and easy to read. Okay. For the written parts, for theory, I would look at target costing. I would look at, I would also look at limiting factors, because they sometimes explain why you choose a specific way in limiting factors. And that 8 marks is just for that written question there, Deborah. No problem. A disadvantage, your selling price is fixed, and the costs are not flexible. The costs aren't flexible. Once you've realized what you want to sell it for and what your profit is, bang, that's it. You're left with that. Okay. And also, yes, it's expensive. We have to do the market research as well. Okay. Brilliant. Right. Well, those 2 questions there. Thank you very much for your time tonight. I hope you've enjoyed it. I hope you've learned something. I've learned something. Don't cross Caroline. She'll have a go at you all night. Yes, we will, Dave. We'll be having a look through one of the more wordier questions. I'm going to ask one of my colleagues to do that next week. Okay, because those are the ones where there's an awful lot of marks available and it's all to pick this up. Okay, brilliant stuff. Well, thanks for your time, everybody. I'll make sure that all this gets sent through. Okay, which tasks are written in the exam? It's usually 5, 7, and 8, Sarah. Okay, thanks, Joella. No problem. Thanks, Jessica. Do we have this paper in our FI book? No, it's a separate one that came through for the revision classes, Jessica. I'm also going to ask them to send that through. Caroline just popped that on there because she's brilliant. She's popped a link on there. I'm groveling now. Okay, I'll stop the recording.